Good evening and welcome to our market analysis. Let us begin with the macro liquidity environment. We are seeing significant improvements. The 10-year U.S. Treasury yield has dropped considerably to 4.35%. This reflects growing market expectations that the Federal Reserve will shift toward a more accommodative policy stance. Lower yields reduce the discount pressure on risk assets. At the same time, the U.S. dollar index DXY has broken below the 98 level and is now trading at 97.92. This development is releasing liquidity into non-U.S. markets. Taken together, macro liquidity is clearly expanding, and this is favorable for risk assets including cryptocurrencies. Now turning to market risk appetite. The VIX Volatility Index has fallen to a low of 16.93. This indicates that market fear is receding. We also see strong performance in the A-share market, especially the Chi-Next index, which has rallied significantly. Northbound capital flows into Chinese equities are robust. These are clear signals that global capital is chasing risk assets. Gold has risen to $4,717.2 due to geopolitical factors. However, we view this as event-driven safe haven demand rather than systemic risk aversion. Let us examine capital rotation and divergence. The market is showing clear structural differentiation. Capital is flowing out of crude oil and U.S. dollar assets. WTI crude has plunged to $95.3. The money is moving in three main directions. First, into equity markets represented by shares driven by risk appetite. Second, into gold driven by geopolitical hedging. Third, into U.S. Treasuries driven by rate cut expectations. Within the crypto market we also see divergence. Bitcoin is holding relatively stable at $81,517.31 while Ethereum is underperforming. This suggests that in times of uncertainty capital prefers the more established Bitcoin. Now for our Bitcoin directional view. We see an upward move with a probability of 75% within a 24-hour window. The core driver is the convergence of improving macro liquidity and rising risk appetite. This creates a strong tailwind for Bitcoin and other risk assets. Additionally, positive developments in the SEC and Coinbase regulatory framework are reducing industry uncertainty. However, we must note that gold is also strengthening. This means the market is not universally optimistic. Local geopolitical risks remain. Bitcoin's current gain of only 0.24% lags significantly behind equities. This shows that capital is still hesitating. Nevertheless, the dual positive factors of liquidity and risk appetite are dominant. We expect Bitcoin to play catch-up and break higher. The verification standard is that Bitcoin price holds firmly above $82,000 within 24 hours and challenges the previous high near $83,000. Now for the ETH to BTC exchange rate. We expect Ethereum to weaken relative to Bitcoin with a probability of 65%. Although risk appetite is recovering, the strength in gold and the divergence within crypto indicate that capital still carries a safe haven bias. In this risk-on environment with a hedging overlay, capital prefers Bitcoin, which is viewed as digital gold over the higher risk Ethereum. The current ETH to BTC rate is approximately 0.02894. The ongoing downtrend in this pair validates this capital preference. Our verification standard is that the rate fails to reclaim 0.0295 within 24 hours and further breaks below the support level at 0.0288. Let me summarize the market state. We are in a liquidity-driven structural divergence market. For Bitcoin, our strategy is to go long. For the ETH to BTC pair, our strategy is to be long Bitcoin, which means shorting the ETH to BTC rate. Our confidence level is 80%. Our verifiable predictions are as follows. First, for Bitcoin we forecast an upward move with 75% probability. The verification condition is Bitcoin price reaching $82,500 within 24 hours. Second, for the ETH to BTC rate we forecast a decline, meaning Ethereum weakening relative to Bitcoin with 65% probability. The verification condition is the rate breaking below 0.0288 within 24 hours. Our overall probability assessment for today is 70% for an upward move, 20% for a sideways consolidation, and 10% for a decline. Investors should watch for Bitcoin to break above $82,500 and for the ETH to BTC rate to fall below 0.0288. Thank you for watching and good luck with your trading.